what really struck me most recently is President Trump and how glowingly he spoke about Tim Cook, how Tim Cook calls up the White House, talks to him, makes a convincing case. Should more CEOs, for instance, do that, do it the one-on-one approach?
Thanks so much. I think you're right, and happy Labor Day weekend to you. I guess you won't start for another 16 hours of work there on the set, but for everybody else, happy start of Labor Day weekend. And what an interesting contrast we have of models out there. The CEOs are becoming an increasingly unhappy group, and there's some paradoxes in there. The current issue of Chief Executive Magazine has this ongoing poll survey that has the lowest level of CEO confidence since October of 2016. And a lot of it's now 62% are pretty unhappy with how they look at their immediate business future, and it's roughly the same as they look at the immediate. They're looking at trade sanctions. They're very disappointed in how they're unfolding. But in our own surveys here at Yale, we find that 75% of CEOs are also unhappy with their trade associations. And, of course, 75, 76%, contrary to what Stephen Roach said earlier from this set here, is they're also really unhappy with China. And they feel that they are being treated unfairly. And they have extensive documentation how they justify that. So this is a quandary. What do you do about it? One thing, as you then mentioned, is Tim Cook of Apple, Steve Schwarzman of Blackstone, Ginny Rometty of IBM, Marilyn Hewson, Lockheed Martin, have found ways of working with the administration that has been pretty effective in looking at enterprise-specific and some industry-wide issues by not grandstanding, not humiliating, talking privately in respectful ways. That works so far. We think that Apple may get some carve-outs around all this from the U.S. in terms of some of these issues. But the trade associations, as you heard earlier in the earlier hour, we've got 150 U.S. trade associations bonded together, and then separately the American Enterprise Institute complaining about these sanctions. And we'll see if collective action works as an alternative. In the past, collective action has broken down a lot, and that we'll see if that will have some influence. But these are the two rival approaches taken through the direct confrontation of a unified voice of business, which obviously worked post-Charlottesville in the withdrawal from the president's advisory councils on that issue. Will it work on trade? We'll see.
How is there collective action in this particular instance? I mean, they're not going to withdraw from a presidential committee to show their feelings.
That's a great question. If I were there to scream back at the person you have for the American Enterprise Institute, and they're saying, well, we don't like this. We want the World Trade Organization to resolve these things. Well, the World Trade Organization, it's fitful, is in terms of multilateral oversight. We have 300 new regional trade agreements that have undercut the World Trade Association. We also have a lot of dispute on how the appeals process works there. The U.S. has won 95% of the complaints that we brought to the World Trade Organization, and that's what supporters always say about the World Trade Organization. But we've also lost 89% of the complaints against us, and President Trump, this administration, says we don't like who the judges are. Right now, there's one American who's stepping down, I believe, in November, one Indian who's stepping down in November, and the only third member is a Chinese person. So by November, who will remain, and the U.S. says we're going to block any future nominees, there won't be a functioning World Trade Organization to appeal to. So I'm not sure what these trade associations think will be the alternative to the tariffs they don't like. And yet the CEOs are really unhappy with unfair trade practices. David Barboza of the New York Times came out with a list of 20 companies that have had unfair trade, imposed trade technology transfers. And they don't want to talk about it publicly to Stephen Roach or to the rest of us on TV because they're afraid of reprisals, one company after another from the Chinese. But collectively, they talk privately.
Now, Jeff, this is Joe Zeidel here. A lot of the companies that we're talking about have significant exposure into China with respect to their supply chains, right? Because China, is the, kind of provides a quarter of the world's manufacturing output. But at the same time, they're also selling a lot into China as well. So as we think about companies maybe realigning their supply chains, they might move out of China in order to avoid tariffs. But at the same time, they have to sell into China. How do the CEOs weigh those two issues? Protect themselves from tariffs and potentially cut off one of their biggest markets? How is it that they're going to reconcile those?
They're very worried about threading that needle. You're exactly right, Joe. Is that they want China for China. They want to manufacture in there, and you're right. It's 25% of world manufacturing. But it's easier for some companies, as Jane Wells said, that a lot of the tariffs are going to hit apparel manufacturing, shirts and shorts and things. I'm not sure what we're going to do about the import of live camels. That was a little odd. But those apparel manufacturers are already shifting to other parts of Asia, other countries. It's a lot easier. They don't have the intricate supply chain and infrastructure needs that, say, electronics companies do, where they're very embedded in there. It's hard for them to shift. But I know your question was about selling into the Chinese market, and that is something they don't want to lose. And that's, of course, there's a larger consumer-oriented middle class in China than the entire U.S. population. So who wants to say no to that population? There is a third thing happening here that I should mention in passing, and that is we're also seeing right now this week, because in fact, it was exactly a year ago today that President Trump suggested we might pull out of the World Trade Organization, stunning business groups. Well, we do have business groups that are forming in reaction to other Trump policies, such as EPA moves in the last few weeks, in the last few days, last few hours. We're seeing, for example, collective action forming to come up with perhaps standard setting on auto emissions, standard setting, which is what the major auto companies don't want to remove the emissions guidelines that the EPA is asking for rollbacks on. Well, who wants that?
Right.
Is the automakers have formed federations with the state of California to come out with guidelines that Canada and Europe and maybe even other states in the U.S., 16 or 19 of them, is we're seeing the automakers are coming together. Same with petroleum and natural gas companies actually already invested the money to clean the methane out of their process. And now they're being told to roll that back. Those companies, Shell, BP, they say, we want to stay with it. We're in favor of it, Chevron.
Right.
And these CEOs are coming out. So we might see some standard setting set by individual companies that has them put their money where their mouth is by last week's Business Roundtable pronouncement about other constituencies. Well, let's just see if they come up with their own standard self-regulation. That's what Underwriters Lab represents. That's what the American Bar Association represents and guilds. And we've seen self-regulation in other areas. And we might see the business community try to fix problems on their own if they're not happy with the administration.